Hey everyone, Coach Investor back to another video for today. So SoFi earnings report day, and as always, not surprised, a beat and a raise. The stock is up around 8 to 9% at the time of making this video. Of course, when the market opens, things might change, and you might have heard, maybe not, but JP Morgan is taking over First Republic. So yes, another bank is gone. Now, with SoFi, execution is key. Execution has been top notch for a while, especially navigating these muddy waters in the last couple of quarters, if not last 2 years actually, or maybe even 3. So I want to start with a couple of comments from the CEO. He started by saying we delivered another quarter of record financial results and generated our 8th consecutive quarter of record adjusted net revenue, which was up 43% year over year. We also generated our 3rd consecutive quarter of record adjusted EBITDA of $76 million, representing a 48% incremental EBITDA margin and a 16% margin overall, as well as 54% incremental GAAP net income margin. Strength across all 3 of our business segments, lending, technology platform, and financial services, drove these record results. He then concluded by saying total deposits grew by a record $2.7 billion, up 37% quarter over quarter, not year over year, quarter over quarter, to $10 billion at the quarter end. And 90% of SoFi Money deposits, inclusive of checking and savings and cash management accounts, are from direct deposit members. For new direct deposit accounts opened in the first quarter, the median FICO score was 749. More than half of newly funded SoFi Money accounts are setting up direct deposits by day 30, and this has had a significant impact on debit spending. With our launch of offering FDIC insurance of up to $2 million, 97% of our deposits were insured at quarter end. And of course, thanks to more high quality deposits, the cost to fund their loans is coming down. And when it comes to cash and cash equivalents, right now it keeps increasing. Actually, it increased $1 billion since last quarter. So far, so good. You see what I did there? Anyways, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now let's go through the earnings report. So they continue to add members to the ecosystem. They added 433,000 members in Q1, bringing the total to 5.7 million. That's up 46% year over year. Of course, tremendous growth in the last 3 years. When you look at products, that's now at 8.6 million. That also increased 46% year over year. They added 660,000 new products. As for Galileo account, that actually decreased quarter over quarter for the first time. So would like to hear more on that maybe during the earnings call. So now it's at 126 million. That's up just 15% year over year. Let's see the reason behind that. Then overall the split here, lending products, financial products. Lending products increased 24% year over year. Financial products increased 51% year over year. And as you know, there is this graph here that shows that, right now, total financial services products, 5 times more than the lending products. Because at the start, a lot of people were saying, SoFi will have issues because it's mainly lending. But right now it's been a while. It's not the case. And so quarterly adjusted net revenue reached $460 million. That's up 43% year over year. Quarterly adjusted EBITDA, $76 million, beat expectations as well. And that's up 8.4 times year over year. And you can see the results here, their guidance and by how much they beat it. So adjusted net revenue, 7% on the low end, 5% on the high end. And then adjusted EBITDA, 7% low end, 6% high end. Now as for Q2 outlook, also beat the market's expectation. They now expect to deliver between $470 and $480 million in adjusted net revenue, which would see 32 to 35% growth year over year. Then as for adjusted EBITDA, $50 to $60 million, adjusted EBITDA margin of 11 to 13%. Of course, I don't want to jump the gun here, but seeing how well SoFi has been performing in the last couple of months, in the last 2 years, my bet is they beat again on their own expectations, which of course some people might say, they're just sandbagging so they can beat. Might be, but at least they beat. And then now, as for the full year non-GAAP guidance, they already gave us that guidance, but right now it increased a tiny bit. So for adjusted net revenue, they expect annual growth between 27 to 31%, previously 25 to 30%. Then adjusted EBITDA and the margin there is now 14%, before between 13 and 14%. And again, they say here this guide assumes positive quarterly GAAP net income in Q4 2023 and a 20% incremental GAAP net income margin for the full year. Now, quickly before I conclude, share-based expense is now at 64.2 million, which is down from 77 million. So again, these things are coming down quite nicely. And our one last thing, of course, with regards to loans, everybody has the same question all over again. So student loans still impacting the business negatively. It's down 47% year over year. Home loans as well, 71% down year over year. They say here first quarter home loans volume of nearly $90 million were down 71% year over year due to continued issues with fulfillment partners and macroeconomic headwinds from rising rates. If you're following the home market, you know exactly why that is. The company is continuing to integrate Windham Capital Mortgage, which was acquired at the beginning of the second quarter 2023. So we obviously will be seeing some effects of it later this year. So to conclude, another great quarter of execution from SoFi, although I would like to see some explanation with regards to Galileo, especially after the acquisition of Technisys, the effects of it, maybe what are they seeing that are not going according to plan, maybe more information during the earnings call. I'll be sure to pin that later on under this video. But of course, do share your thoughts down in the comments below. What do you think about this quarter? Is this enough to convince you to open a position or maybe add to your position? Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye bye.